Hello, I think we should start now. I'm sorry that I'm late. I was making a call. Okay, so I think we should start now. Today is just about um, let's say the introduction to SMC. Okay, so I'm not going to go into much details about the SMC, but I will only talk about the um, the introduction of SMC. Why trader you prefer using the SMC strategy to open or to enter the market? Okay. So before I continue, I want to ask, or I want to know if you can see the screen uh, clearly, or if you can hear my voice. Should I make any adjustments? Okay. I think we should continue. So when we're talking about SMC, I'm talking about smart money concept in binary option. Smart money concept in binary option. Okay, we have been taking trade, we have been trading forex, binary, commodity, etc. We always use price action. Okay, but when I'm talking about smart money, I'm talking about the smartest way to trade the market. Either you trade binary option or forex. Okay, so this is the smartest way you trade. Uh, the smartest way you trade the market. Okay, that's why we call it SMC. Now, when we're talking about SMC, we are talking about let's say okay, we are talking about let's say, in trading SMC, or let's say the concept of smart money general refers to the idea that certain market participants often consider more sophisticated or well informed. Like it's a well, let's say some people who try to analyze the market very well, that's considered what will happen to the market, like able to analyze the charts, able to analyze the trend, able to analyze candlestick, able to analyze the price action, or those are the kind of people we call the smart money concept. Okay, they just let's say they refer to the idea that certain market participants, okay, often consider more sophisticated or well informed. They make trade based on superior information and analysis. Okay, they make trades based on superior information. Superior information can be from your indicator, can be from your bots. Okay, also analysis like price action, the let's say using the double top pattern, using the engulfing pattern, the triple top, bottom, something like that. Okay, so traders often analyze the behavior of these participants as it may provide insights into potential market trend. Okay, let's say we have SMC. Retail traders are not SMC. Okay, retail traders are not SMC. Okay, we only use the analysis from SMC to analyze the market. That is what retail traders do. Okay, you cannot predict market like a SMC trader. Okay, look at what I say here. Traders often analyze the behavior of these participants as it may provide insight into potential market trends. Okay, that is what we do. We use the analysis techniques to analyze the behavior of market. Okay, we use it in order for us to know what is happening in the market. So here are some key aspects of smart money concept in trading. The first one is the institutional investors. What we mean by institutional investors, we're talking about such as large hedge funds, mutual funds, and other financial institutes. they often consider part of the smart money. So this entity typically have access to extensive research, market intelligence, and professional analysis. Okay, so when we are talking about people who participate in smart money concept, we are talking about the institutional investors. Okay, so we are talking about institutional investors. They participate in the market in smart money using the smart money techniques. They are the smart money traders. The institutional investors, they are the smart money traders. They are such as large hedge funds, mutual funds, and other financial institutions. Okay. Then the second one is the volume and liquidity. Volume and liquidity. The key aspect of smart money, the second one is volume and liquidity. So smart money often associated with larger trades that can signify or that can significantly impact market prices due to their substantial financial resources. Okay, observing unusual trading volume or large transaction may be an indicator of smart money activities. Okay, what smart money do in the market is that they observe the volume and liquidity of the market. That is what they are after. The volume of the market and liquidity. Okay, that is what they are after in the market. That is what they are after. Okay, they observe the volume of the market and liquidity. The volume means that the amount of buyers or sellers in the market. Okay, while liquidity means that the money, let's just say liquidity equal money. It's just the money that traders invest. Okay, so what they do is that they observe this this key aspects in trade in the market. So once they locate the volume of the market, they see the sellers are penetrating, or if the sellers are more active than the buyers, or buyers are more active than the sellers. What they do is they look for liquidity of related traders, traders who buy and sell at a certain level. So what they do is that they may form their own pattern to sweep the liquidity of traders, then start to move the direction of the previous prediction. So the next one is the insider trading. Why illegal insider trading is prohibited? Okay, the concept of smart money sometimes involves traders or investors who may have legally obtained non-public information. So this information could give them an advantage in making informed trading decision. The inside trading. That is why you might be wondering that why is it that so many traders, some traders, they show account of $1 million trade account, trade balance, $1 million trade balance. You might be wondering that what is their secret? Okay, what is their secret? A lot of people have been asking me, what's my trading secret? Well, I usually share my trading secret, share my trading strategy, most especially in binary option. And that is what I'm going to do. I'm going to teach you different ways to analyze the market. But first, today I'm going to talk about the introduction of smart money. Also talk about the market trend. Okay, that is the first thing you have to learn. You must know what we mean by you cannot just jump into smart money, but you must find out what it means to trade smart money. Also, what it takes to become a smart money traders, and also how smart money traders analyze the market or analyze the trend of the market. So the third aspect of smart money is that there are some insider traders. These traders, they legally obtain non-public information. Okay, they secretly obtain non-public information that they have some kind of strategy that they usually use in the market that give them good profit all the time. But trust me, not all the time you always win the market. That you're going to make profit in the market. No, there's nothing like 100% in trading. Okay, sometimes you lose, sometimes you win. But these insider traders are the smart money. They have already obtained some non-public information. Okay, so this information can give them advantage in making informed trade decision. That is why you always see a big, large volume of bearish candle, a big, large volume of bullish candle in the market, because they have already know where the market is going. So they have already see, just like they have already see the future of the market. But it's impossible to see the future, but they have different information, they obtain different information that can give them decision of future market. Okay. So this kind of information, they don't share with retail traders. Okay. So that is one thing you should know about smart money concept. Okay. Then the long-term investment. When we're talking about long-term investment, smart money investors are often believed to take a long-term perspective in their trading strategy, rather than reacting to short-term market fluctuation. So they focus on fundamental analysis and trends that may unfold over an extended period. Okay. These smart money traders, what they do is that they use long-term, higher time frame for trade entries. They can use the monthly time frame, they can use the weekly, they can use the daily. Okay. So they don't like to use the short-term short-term trade, short time frame trade. Okay, they don't like to enter markets with a short-time entry. Okay, because sometimes the short-time entry, short-time market, like 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, market always fluctuates. So they can't be able to understand the market movement until they use the long-term trade, long-term analysis. Okay, so they use higher time frame for trade entries. That is one thing you should know about smart money concept. They don't use 1 minute like we traders use. The reason why retail traders use 1 minute is because we will always use the analysis that smart money uses. We use that on 1 minute because we like to wait and see what will happen to our trade. We don't want to wait for too long. Okay, but smart money, they can wait for years. They can wait for months. Okay, they can wait for years. They can hold the trade for months. They can hold the trade for years. They can hold the trade for weeks. Okay. Then number 5, the contrarian indicators. Okay, these actions of smart money are sometimes considered contrarian indicator. For example, if institutional investors are accumulating a particular asset, it might be interpreted as a bullish signal for that asset, or vice versa. What I'm saying is that sometimes they use indicator that they have something that indicate to them that, okay, if the price is going down, okay, then market accumulate for short while is a sign that this is a bullish pattern, that the market is ready to rise at any moment. So what they will do is wait for any breakout or wait for a confirmation. Okay, they are the one that move the price. But as a retail traders, we don't understand what is going to happen. Okay, we only see that the smart money traders put the price upward. So what we do is that as a retail traders, we wait for the price to return back. Okay, we wait for the price to return back, then look for any confirmation and enter the trade. That is what retail traders do. Okay, so we use the sign, the structure, okay, to analyze. Then the next one which I want to talk about is the risk management. Okay, smart money traders are often associated with a disciplined risk management strategy. Okay, they may use advanced risk model and techniques to protect their capital and ensure sustainable long-term performance. Okay, that is one thing you should know about smart money. Okay, risk management. They know how to risk their money. Okay, to avoid much loss. Okay, not that there won't be any loss. Okay, there's going to be a loss, but they must know how to manage such loss that they will not actually blow the account. Okay, So it is important to know that while the concept of smart money is widely discussed, accurately identifying and following the action of this participant can be challenging. So moreover, markets are dynamic, and what may be considered smart money is one instance may not hold true another. So traders and investors should approach this analysis with caution and conduct thorough research before making trading decisions. So the next one I want to talk about is the jargons in smart money. That is the language we use as a smart money traders. The language that we use. So if you see any type of this application letters, you should know what it means. Okay. So we have the H here as the high. You see H high, low, L, double H we call it higher high, double L we call it lower low. The QM we call it Quasimodo, QLM we call it Quasimodo level or Quasimodo line. Upper, okay, it can be upper part of QM that consists of higher and higher high, or lower is the lower part of the QM that consists of lower and lower low. Okay, we also have the MPL, maximum pin level. We also have the DP, decision point. All this I'm going to show you, but not today. Just today is just for you to know the introduction of, let's say, for you to understand what it means to be smart money traders and the jargons that, let's say, the smart money language that we speak. Okay. Also, when we see something we call SL, it means stop loss. TP, it means take profits. RBR, rally based rally. Okay. RDB, BD, rally based drop. DBR, drop based rally. DBB, DBD, drop based drop. FTR, fail to return. FTB, first time back. Fake out, that is fake breakout. SR flipped, that is support and resistance flipped. RS flipped, that is resistance and support flipped. SSR, significant support and resistance, or SRS, significant resistance and support. The kink, we have refers to that kink setup. Okay, that is the double Maru pattern. Okay, supply, it refers to our supply zone or sell zone.
Okay.
Demand, it refers to as demand zone or buy zone. TF, that is time frame. HTF, high time frame. High time frame like daily, weekly, monthly. Lower time frame like 4 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes, 1 minute, 3 minutes. Okay. We have the STF, that is small time frame. We have the 5 minutes and 1 minute. Okay. Then CP, we have the compression. We have so many jargons. Okay. Maybe in our next class, I'm going to discuss that. Okay. We have the OTE, we have the BMS, we have the POI, we have so many other jargons that we know in the smart money concept. Okay. But this is the most important one that you should first know. Okay. So in our next class, I'm going to talk about more of these jargons. Okay, and I'm going to discuss the details. Okay. So it is very much important for you to understand what is smart money and what are the language that we speak is smart money. Okay. So now this is the table of contents. Okay, table of contents. We have the trend. Okay, this is part one. Part one table of content. I'm going to stop in the next 3 minutes. Okay, I'm going to stop in the next 2 minutes. So the trend. Okay, this table of contents, chapter one. Now let me just say the part one of chapter one. I'm going to talk about the trend, the two trend of markets. Okay, the market movement, the 3 basic moves, the 4 movements. Chapter 3, introduction of zones, so many, then the setups. Then chapter 5, confirming the trade with flow. Okay, fake out version 1, fake out version 2, fake out version 3. So these are what I'm going to discuss in our next class. Okay, we start from chapter 1, the trend. So this is the first thing as a smart money trader. This is the first thing you must know. You must know how to analyze the trend of the market. The trend of the market. Is it bullish or is it bearish? Is it rally or is it dropped? Okay, or the market is moving sideways. No, this is binary. This is binary. I'm going to show you how you analyze the trend of the market. That will be in our next class. So in our next class, I'm going to talk about the trend of the market. So after this class, I'm still having another class. Okay, I'm still having another class in the next 1 hour. Okay, so we're going to continue on Monday. Okay, Monday will still be our next class. Okay, our next class, Monday. So I'm going to discuss about the trend and I'm going to discuss about the market movement. That will be on Monday. The trend, these are what I'm going to discuss on Monday. Okay, the trend, the market movement. Okay, so I think I should stop here for today. So I hope you enjoy the class. So we're still going to do some practicals, like open a chart and do some analysis on the chart. Okay, also take some trade. But we are still going there. Okay, so I'm going to start from the beginning of smart money. Okay, so that is how we're going to start the smart money classes. Okay, see you in our next classes on Monday. So tomorrow I'm going to have another class tomorrow, the VIP class tomorrow. But your class will be on Monday. Okay, on Monday. Also the signal also will start on Monday. Signal on Monday as well. Okay, good night.